Hello, and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Mark Bowman, our Global Markets Specialist, JP Steiner, our Associate Economist, and Mark Soderberg, our Senior Ag Market Specialist. Starting with the soft markets, Mark Bowman, what did the ICCO report tell us about the cocoa supply-demand balance?
So the ICCO is the International Cocoa Organization, and on Friday they released an update, their second quarter update, in which they released a revised production for 23-24 world cocoa production as last year's. They revised it down to 4.368 million metric tons from 4.489 in the first quarter. They also lowered grindings to 4.818 from 4.885 million previously. And this widened the global deficit to 494,000 tons from 441 previously. A 66% decline in global ending stocks for 23-24. Now, they didn't provide any updates for 24-25. They first put their first update out in the first quarter, but no changes, not even an update this quarter. But we can assume or deduct that the beginning stocks for 24-25 will fall 66,000 tons from previously. And this would put the global stocks usage ratio at 32%. It's a little better than last year's 26%, but it's still the second tightest on record going back to 1984-85, tightest since then. Ivory Coast production was left unchanged, but Ghana's was lowered by 81,000 tons, Ecuador's by 11,000, and Brazil by 18,000. Ghana's especially troubling. They're the second largest producer in the world, and they've had troubles not only from poor weather a couple of years ago, but also from a lack of investment due to very high prices for fertilizer, and also some problems with the wildcat gold mining that is kind of moved into areas where cocoa production was, and that's harmful for the environment and very harmful for tree growth. They're trying to come back, but it's going to be gradual. And the ICCO also said that they are reviewing the methodology they use for forecasting the winter projections. And this may be why they provided no updates for this current year. This puts a lot of focus on the mid-crop, which is currently in harvest. We've seen some improvements in the weather recently, but that will take time to show results. There's still a hangover from the dry conditions this winter. This week, Ivory Coast arrivals 22,000 tons, which is a little better than last week's 20,000, but still well below a year ago at 32,000. And cumulative arrivals since the marketing year began in October, that was when the main crop starts, they've now 1.624 million tons, up from 1.508 million a year ago. But this is the second lowest in at least 6 years. And that gap between last year and this year is narrowing.
All right, Mark, how is the Brazilian coffee harvest progressing?
Okay, so the Robusta harvest seems to be off to a good start. This is helping alleviate supply overall. Both the New York Arabica and the London Robusta futures have been moving steadily lower since putting highs in April. But July London futures, for example, have fallen to their lowest level since December. Brazil's Arabica crop, which is their 2/3 of their production, that's expected to be down from last year, though several forecasters have at least revised them better, higher than earlier projections. But the Robusta harvest, they call it Conilon harvest, is advancing and growers reporting good yields. We also had a drop in Vietnam cash prices last week, which was attributed to cash pressure from new supply from Brazil. Brazilian consultancy Safra Mercado said today that the 25-26 harvest was 20% complete as of May 28th versus 22% a year ago. But that would include that Arabica harvest as well. He's president of Brazil's largest Conilon coffee cooperative, estimated that around 25% of the total harvest had been completed, and they are expecting a large crop. He also said unseasonal rainfall during the current harvest is not an issue. We did see some cooler weather last week in Brazil coffee areas, but no frost was detected. But we'll have to see how the Arabica harvest comes in. And that harvest is behind the Robusta, but the Robusta crop does help alleviate the persistent tightness of the past couple of years overall.
Thanks, Mark. Moving over to ags, Mark Soderberg, what would you attribute to the early week strength in wheat prices?
Well, I think there's a number of things we could point to explain the higher wheat trade, but in general, I think it's simply just a market that's adding both weather and war premium. Weather-wise, we have a dry outlook across parts of Europe, which would include southern Russia and the Black Sea region. Key wheat areas in China's northern plains and the Yellow River Basin also remain dry for the next week or so. However, there are better prospects for rain in week 2 of the outlook. Well, here in the U.S., we're really looking at too much rain. We got some pretty widespread 2 to 3 inch totals forecast for the southern plains this week. Some areas could see 4+ inches. This just as the winter wheat harvest is usually beginning to roll. These types of rains, coupled with some high winds, could result in some field loss and disease pressures. And then, of course, we've got the war in Europe. This weekend, we saw Ukraine strike 4 military bases deep within Russia. While these strikes reportedly did some significant damage to Russia's air capabilities, these strikes will also likely draw some sort of response from Russia, while also posing a huge obstacle to peace talks. Well, so far it hasn't seemed to impact the either country's ability to export wheat. However, that threat does remain possible. This is all happening while the speculative traders remain very heavily short across the wheat market. Well, money managers, they've been net buyers over the past 2 weeks. Their combined short position across all 3 classes is just over 211,000 contracts, and that's not much off the recent record large short position, that coming in at about 235,000 contracts just 2 weeks ago.
All right. What do you expect in this afternoon's crop progress reports?
Well, I think corn plantings are going to advance to about 93, 94%, up from 87% last week, just staying just ahead of their 5-year average. Ratings, which came in last week at 68%, good to excellent. I think we'll see some slight improvement. I'm down at 70%, up 2%. However, that would still remain at the lower end of the range here that we've seen over the last decade for early June. Bean plantings, I've got it pegged at 85%, staying above the 5-year average of 80%, but however, it has started to slip off the record pace it's been at. Bean ratings will likely get off to a decent, okay, not a great start. 69% good to excellent is my expectations. Winter wheat harvest just underway, probably in only 2 to 3%. Ratings, I think they're going to slip another 1%. I've got it at 49% good to excellent. And also hitting the home stretch here on the spring wheat plantings. I'm at 94% as of yesterday's date, with a little bit of an uptick in crop ratings. I've got it up 2% to 47%. That's coming off of a very low figure. It was the initial report last week at only 45% good to excellent.
All right, thanks, Mark. Finally, over to JP. Why is copper trading sharply higher today?
Yeah, so July copper futures jumped nearly 5% Monday morning, widening their premium over LME contracts. This is pretty much due to rising speculation over a possible tariff on the metal, as President Trump announced a 50% tariff on aluminum and steel over the weekend. Back in February, President Trump ordered a probe into possible new copper tariffs on copper imports to rebuild U.S. production of a metal that's critical to electric vehicles, military hardware, and semiconductors. Traders took the tariff news over the weekend as a sign that a tariff on copper will be implemented, causing prices to shoot up. Copper has been flowing into the U.S. in recent weeks as producers have been racing to get the metal into the country before any tariff is levied. CME copper stocks have risen to record highs of over 180,000 tons last Friday, while U.S. government data shows copper imports in March rose to more than 123,000 tons, compared to around 58,000 tons in February and 76,000 tons in January. Traders will continue to watch for signals from President Trump on any potential tariff. But given the current situation with aluminum and steel, it is likely that copper will see a similar tariff.
All right, JP, last question. What economic reports are due this week?
This week is filled with some highly anticipated economic data, including some labor reports later in the week. Monday morning, we got manufacturing PMI data for the month of May, which came in just below expectations of 52.3 with a reading of 52.0. This figure is higher than last month's reading of 50.2 and does suggest that manufacturing activity increased month over month in May. Construction spending shrank 0.4%, where economists were expecting an increase of 0.4%. The construction industry is something I would pay a close attention to in regards to the labor market, as around 11% of the male workforce in the U.S. works in construction, so a downturn in the industry could have major implications for the broader labor market. ISM Manufacturing PMI, which is the Institute for Supply Chain Management's PMI gauge, and ISM Manufacturing prices for May also came in Monday morning, showing a contraction in manufacturing activity and a decline in their price index. This is counter to what the S&P Global reading of 52.0 showed. It should be noted that their sample sizes are different and do sample different sized companies. However, it did show a contraction in manufacturing activity. JOLTS job openings for April are due 9 a.m. Central Time Tuesday. Last month, we had a reading of 7.192 million job openings. ADM non-farm employment change figures for May are due 7:15 a.m. Central Time Wednesday, which should give an estimate of what the official figures of Friday's labor report might look like. Economists are expecting an employment increase by around 110,000. Services PMI, ISM non-manufacturing PMI, and ISM non-manufacturing prices data for May will be released 9 a.m. Central Time Wednesday. More labor market data Thursday with continuing and weekly initial jobless claims due at 7:30 a.m. Central Time. We also get trade balance figures for April Thursday. The trade balance is expected to show less of a trade deficit owing to a decrease in imports into the country, which shouldn't be a surprise given the tariffs. Now, the highly anticipated non-farm payroll figures, unemployment rate, and average hourly earnings for May are due at 7:30 a.m. Central Time, Friday. Last month, the unemployment rate held steady around 4.2%, and expectations are that it will remain as such. Now, the natural rate of unemployment is estimated to be approximately 4.1%. So far, the unemployment rate is close to the Fed's dual mandate of maximum employment and stable prices. I would say out of all the economic data reports, Friday's labor market data will be the most sought after and really give investors a sense of how the economy is reacting to tariffs.
A lot of things to look out for. Thanks, JP, and thank you, Mark and Mark. Remember, the views and opinions expressed today on this video are solely those of our guest speakers and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.